All right, good afternoon, good morning, everybody. Today is the 15th of December, 2024. We're going to start here with our broad market analysis. Let's try and make this quick and easy and painless. We're going to go over several things today. And as you all know, my name is Trendy John. I am at simplertrading.com. I am the creator of the Trendy Methodology, which basically means that I took supply and demand. I dabbled around for many, many years. I came up with a complete system that I teach thousands across the world. So, in this, I'm going to show you a lot of stuff right off the start that basically is what I call noise, but that noise is important to understand when it comes into the market. So, meaning you want to know the times, you want to understand that it can create volatility in the market. So, it's just to prepare you. Now, we are identifying supply and demand by using structure in the market. And we identify those by using zones. And you hear a lot about zones on charts. And basically, the green zones are where we look to go long, and the red zones are where we are looking to take profits and or potentially going short, depending on the overall environment and what we're expecting. So we're going to start here by last week's, or not last week's, this week's major U.S. economic reports. We want to go ahead and get an idea of what is coming up on the calendar for this week. So starting Monday, December the 16th, and these are Eastern time at 8:30, we have the Empire State Manufacturing Survey, and then that is followed up with S&P Flash U.S. Services PMI and manufacturing PMI as well. So pretty quiet going into tomorrow. Tuesday, December 17th, we have US retail sales, and then we have industrial production, and then home builder confidence index. And then Wednesday is where it starts to get a little bit more interesting. So I always like to say, and you'll start to see this routine, if you will, where Monday and Tuesdays in most parts are just kind of setting up for what I feel is like a playing field for the more major volatility that could come into the market. So again, Monday and Tuesday looking more like a playing field, get us an idea of what we're expecting. And what I like to say is if Monday and Tuesday, let's just say that we get a gap up tonight and the market bounces. And on my charts that I'm going to show you here a little bit later, we have supply zones. And let's just say that we move all the way up into that supply zone before the major catalyst on Wednesday. So that would be Fed Chair Powell and then the FOMC. Then I am a lot more cautious. If for some reason Monday and Tuesday continue to the downside, kind of like what we saw on Friday, and we head into a green zone, which is going to be your demand, then I'm looking for that catalyst on Wednesday to push us to the upside. All right. So on Wednesday, again, housing starts, FOMC, Fed Chair Powell. That's coming in at 2 o'clock Eastern time, which is about 2 hours before the market closes. So again, Monday and Tuesday kind of look like, for right now, unless something big has happened over the weekend that I'm not aware of at the moment, it just looks like it's going to be pretty quiet. But again, price is king and we follow price. Thursday, we have initial jobless claims. GDP, existing home sales, and then US leading economic indicators. And then on Friday, we have personal income, PCE, core PCE, and then consumer sentiment. And again, that is our schedule looking at the 16th through the 20th. Very, very important. We do have OPEX coming up into the week. We also only have 17 days left until our quarter candle closes, but also right? We're right around the corner from Christmas, the holidays, so things start to slow down a bit. Overall, this year has been amazing for a lot of traders. December's can be a little bit more difficult to navigate. One thing I want to talk about before we move on is what I'm noticing on social media and just out there in the environment or in the financial ecosystem is, a lot of traders are showing that they've done very, very well in the last several weeks, maybe even just the last couple days. And I start to feel, inside, I start to feel a little bit of FOMO. And I'm going to tell you right now, this is where things get very difficult and you can ruin your entire trading year. If you've done pretty well, Or let's say that you've just, average, right? We're just kind of sideways into this year, or perhaps maybe your trading year has not been that great. I want you to really try to avoid the FOMO because again, a lot of social media is going to be showing how many of these traders have done very, very well. And again, hats off to everybody who's done very well. But again, I want you to focus on you. I want you to finish the year strong, and that means being disciplined and consistent with your trading methodology. Just don't get sucked into the FOMO of thinking that you haven't done well enough or you haven't made enough money and you would like to be in those same shoes, because I promise you, if this is not the time to be pushing things, because if things do not go your way, then you could have a disastrous end of the year. And I'd hate to see that for anybody. So, again, let me just get that out of the way. Thank you for allowing me to do that. Before we move on, go ahead and just take a few seconds, guys, just a few seconds to go ahead and hit the like button. And if you have any friends or family members who are thinking about trading, please share this link with them, and allow them to listen to me and try to understand, and see the things that we look at each and every week on Sunday. All right, let's go ahead and move on. The next thing that I want to be looking at is the earning whispers. So I like to come over here to X, to Twitter, and use this right here, which is your most anticipated earnings release for this week, December 16th. This is also, you know, catalysts in the market that push prices to supply and demand. A lot of times I will trade earnings, because I love using my system of identifying supply and demand. And what we find is that, regardless of the earnings, again, it's just a catalyst to push price to supply and demand. And in most cases, I use call debit spreads and put debit spreads, and I identify those zones. And I look to see which one has the best risk to reward, and then I go for it. At the end of the day, it's a trade, and what is most important for me is that I follow my process and I understand my allocation. This week, far as names that I'm interested in that I could potentially trade into this week, is going to be Micron. So that is MU. And then the next name, that I like on here is going to be FedEx and Nike. Nike, I looked at the annual chart, so meaning every candle represents 1 year. And Nike has been down for 3 years, folks. And I do believe that things can turn. They have come into a demand zone. Now, whether they go up this week on their earnings or not, it's a hit or miss. But what I do know is in the big picture, I like Nike to the upside, so into the end of 2025. So I do like leap positions on this. So perhaps on Thursday we get an opportunity, to get into the trade or add to the trade, again for a long-term trade. FedEx, I just love the name. A lot of times, what I notice about FedEx and UPS and names like that into the holiday season is that, I'm guilty of this. You know, my wife who loves to shop on Amazon and my neighbors who love shopping on Amazon, is every time I turn around in this neighborhood, and I am not kidding, they are delivering every single hour to the house. Like they are busy, and it makes you think as a trader, well, okay, well, I'm just going to buy calls, but that doesn't always necessarily translate to the stock. So please just know that. The next thing that I want to say, and this is just a personal note, what I think is really cool and special, for you during this time of year is to give. And for these workers who are working overtime and coming to your home and dropping off these very special gifts to you and your family, I like to set out a bowl in front of the house. And we do this in the neighborhood and put like snacks in there, whether it be like, and again, not stuff that I'm making in the house, but just like packaged snacks, cookies, chips, granola bars, those type of things, with just a note that says, "Hey, we really appreciate you during this time of year. Happy holidays." Just pay it forward. I think that's a really cool thing to do out there, for those who are working during the holidays. All right, let's go ahead and move on. SPY, the bigger picture, we are going to use what is called Trading View. Here in the Trendy Room and with Simpler Trading, when you purchase our indicators, you also get the indicators on TradingView, which I think is a really cool, piece to your purchase. And when I say that is because TradingView can do a lot of really neat things. I love it for the platform because I can create templates and I can actually create bots that allow me to understand when my prices are setting up based on my indicators. There's just a lot of stuff you can do with TradingView, folks. So I like to use this. We will go back to Thinkorswim here in a few minutes, but for this chart, this is very important to me. Like I said, it's really kept me on the right side of trading this year, and that is paying attention to the higher time frames. So each candle on this chart represents the quarter. Each candle is a quarter. And what I like to do is come in here and give you notes. And I've been doing this since the beginning of the year. And you guys can see that every single week. And although the notes are very simplistic in nature, I am taking a lot into consideration. It's just that I've been trading for a very long time and there's a lot of noise. At the end of the day, I just want to know what my levels are. I want to know what the trend is and what my support is going into this coming week. And that's what I like to share with you. So, guess what? This past week, we created what's called an inside weekly candle. After the big moves up, I believe the SPY moved up about 3 weeks in a row. We decided to pull back and just get an inside weekly candle. That's very important for supply and demand because we understand if we go up and over the top of that inside candle, we're looking for continuation to the upside towards the 614 target that I have, and perhaps even towards 625 before the end of the year. We have 17 days left until the quarter ends. A matter of fact, today makes 16. I apologize. I did these charts yesterday. And 599 to 593 is your close support. And then your targets for your near term targets are 609 to 614. As long as that support holds, again, I'm looking for prices to continue to move in the trend of direction that we've had this entire year, and that is to the upside. Let's go ahead and move on. But, well, wait, before I do that, if this is your first time watching me, again, thank you. But what is really important is to understand that every time the quarterly candle has come into the EMA cloud, we look for buyers to show up. And right now, we have structure here that shows us this is where we have demand. Okay, and we have identified that demand. But what I want you to notice is that the cloud itself is confluent with the structure, okay? And the fact that we have divergence from the top of price into the cloud, just know that if price were to come back there, again, I'm a strong buyer. I don't know the timing, but what I do know is at some point price will come back to test the cloud, and I'll be prepared when we get there. And so I just want to make sure that I share that with you guys, just in case it happens. All right, so we are going to move on to our next chart, which is going to be the QQQ. And again, this is just what I like to focus on during this broad market analysis. Just keep it really simplistic. What is the overall trend of the SPY and the Q? We know it's to the upside. Just like the SPY, we have 16 days left into the quarter. Our close support is going to be 526 by 514. We closed out at 530 on Friday, and it was a really strong week. So, unlike the SPY, it did not come in on the weekly and create an inside candle. Instead, it's been up 4 weeks in a row. And there is potential here. I mean, when you think anywhere from a cycle to 2 to 3 weeks, 2 to 3 days, I usually look for some sort of digestion. And, because we're on the fourth week, there could be an inside week. But again, if we continue to stay up and over that support level that I gave you, 526 to 514, I'm looking for prices to continue up towards 537. And again, we closed out at 530. Targets to the upside, 537 to 550 is what we could see into the end of the year. All right. All right, next chart that we are going to be looking at is the DXY, or the dollar. This is important because, when it's strong, the market tends to slow down, sort of get choppy, and also the overall market starts to move down. All right, so we want to know, like, is the dollar strong? What does it look like? Well, I was projecting after we hit the distal portion of the supply zone that we would come back down into demand. Things were looking really good as we made a nice rejection and then we made a new low. However, the cloud is holding the support, and then we continue to move up into last week. And you guys could see that again, the market started to digest and pull back. All right. A lot of warning signs that I talked about last week that we would get the pullback, and indeed we did. So, you know, going into this week, what I think is important is that there is caution as long as we are staying above 106. So if you want to create a marker or an alert to let you know, hey, if price falls below 106, things are looking really good. All right. But if price starts to move up and over the previous high from almost 3 weeks ago, then I think that you should really pull out the red flag and just say, hey, hold on, like just wait. Timing is the variable, but there'll be better chances to get into trades to the upside. So again, just be careful as long as we're trading above that 106 level. All right. Moving on, I'm going to be looking at the 10-year treasury. This is going to be the TNX. All right, and the big thing here is like I like to see it just calm down and go sideways. That's the big thing. The supply zones also work and the demand zones work um, on charting the 10-year, so we can tell you where the 10-year is going in advance. For example, when it came here, I was looking for the 10-year to fall. It came right into our structure. We then looked for the 10-year to push to the upside. It hit the 618. I was expecting the rejection. We got that for a couple weeks, but then they held, right? The TNX held the cloud, and then we got the push up a lot like the dollar. So you got the dollar and the TNX basically showing some strength here. And again, the markets showed that, hey, wait a minute, warning, pull back a little bit. And that's what we got again on a couple of the days last week. We're seeing the same signs. Again, I would definitely raise a yellow flag and say let's have caution here, and that's exactly what we're doing. The levels to be concerned about, a lot like the dollar, if we were to push over the highs, definitely caution. And if we were to break down below 4.3, then things start to look a little bit better for the overall market. The next thing that I want to be looking at is the skew. I talked about how levels were at an all-time high. This is something that I have never seen since incorporating the skew into my broad market analysis, and I've been doing it for many, many years. And that was an extreme level, and we always look to buy puts or be careful if you don't like to buy the puts, or maybe you're looking at hedging with the VIX or something like that. This is definitely a level where I say be concerned, but I've also reiterated that 2024 being an election year, it stayed inside this box this entire year. We did not see extreme levels to the downside, which were, in my opinion, very shocking. And so, as long as price is staying in between here, we're looking at being long, all right, down here, or more more risk on in this area this year. Um, we're putting risk on, so we're buying SPY calls if we get down to here. But this week, which was really shocking, I was surprised that we were back at 169. I actually thought I come in here and look at this towards the end of the week. Um, I actually thought it was going to be a lot lower, and of course it's not. But then I think, okay, well, dollar, TNX, the VIX, and looking at the skew, this makes sense to me. But where I'm really thrown off is that next level, and that is the fear and greed index. This thing actually ticked back and went to the neutral. Like, why are we neutral? This doesn't make sense to me, but at the same time, it doesn't have to make sense. Usually I am in line with everything. This one is saying, hey, everything is really neutral, but I don't really agree with that. I think that the majority of traders are on the call side. I think we're a little bit more tilted to the greed level, and there could be some downside and create fear. But it could be that because Jerome is coming in on Wednesday, and given the rate decision and so forth, that the market's just saying, hey, we're going to remain neutral here until we hear something. So, what does that mean for like positioning and so forth? I think we're going to, again, we're just going to have to wait until tonight and see how the market opens. Usually, because he's coming in on a Wednesday and we don't have a lot of data coming out on Monday and Tuesday, I would expect the market to be pretty sideways to down in most cases, sideways to down. Now, when I say market, I am specifically talking about ES, NASDAQ. I do identify and watch the Dow Jones, the RTY. Uh, Obviously, I'm in Bitcoin, so I watch Bitcoin as well, which we'll look at that chart here soon. But when I say that, the market is sideways to down in most cases, I'm talking about the ES, the SPX, the SPY, NASDAQ, INDX, and so forth. Okay. So right now, my overall sentiment, I'm just going to be right in line with the overall fear and greed, and either whether I agree with it or not, I'm very neutral. I'm very open to going long and or short. I'm basically flexible, if you will. All right, so the next thing we're going to look at is futures. And this week, I went ahead and I charted both the 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 ESZ24 and the H25. All right. So again, ESZ24, which is the current contract, and then the next forward contract, which is H25. So the first thing I'm going to do is go over the Z24s with you. All right. Because again, at the end of the day, it's totally up to you. You can still trade off of this. You can still use these levels, but what you'll see is most likely a big gap up, and you'll think, oh my gosh, man, this is crazy. But it's just the contract rollover. Okay. So again, these are my levels going into this week. If you choose to stay on the Z for several days, you can still do that. Reach out to your broker if you want more information about that. Here in the room, if you go over to the futures section, let me see if it's the futures. Give me 1 second here. I might have taken it. No, let me see. Yeah, I might have taken it off of there, but I used to have my conversation between me and the brokers about what contract you want to use. I'll tell you, in the past, I just stick to the contract I wanted to trade. Some people talk about volume and it being illiquid, but again, if it's still tradable, I find that I have no issues. Again, it's just totally up to the trader. So again, let's go over both of them. This is the ESZ24. You can see that the 9 EMA is confluent with the future trendy edge. This is going to be my support in the case, something bad happens. 59.70 is where I'd be looking to buy as far as the weekly is concerned. And as far as the weekly is concerned, we hit our target of the 61.13. That was last week's target. It was perfect. It worked out. We did so well, trading SPX and all that fun stuff around it. And then this week, we backed off from that 61.13 target. And like I said, we just kind of came inside and are hanging out. And we need to see continuation above 6100 basically for us to continue to move up towards my year end target. So this right here, guys, this is a Fibonacci spiral, or like I use it for a bullseye. So basically I'm saying, hey, this is the target. So we've hit one of those targets, and my next target is going to be 62.31. So I'd really love to see price push up into this level. All right. Let's go ahead and move on to our next, the daily. All right. And so the daily has triggers, if you will. Last week, it worked really, really well. You guys can see all I'm doing is using the trendy edges. The trendy edges help identify supply and demand. We basically go long at the bottoms. Okay, so you can sell on the SPX. You're selling put credit spreads. You could sell some iron flies if you like to skew them like we do in the SPX room. And up here, you could look to sell call credit spreads and so forth. Well, if you look, now we have two more levels here. And basically, I'm keeping everything the same that we had from last week. You can see that we came into the trendy edge and we came into the first buy trigger. So this makes me think levels over anything that I'm thinking, right? Is that we see a bounce into tonight's open. All right. Even though I'm neutral, I'm thinking we see a bounce into tonight's open because we came into trendy levels. Now, if for some reason I'm wrong and we can't get up and over 60.50, then again, I think sideways to down. All right. The next long trigger here on the Z24 is down towards the 59.5 level. All right. Let's go ahead and go to the 4 hour. All right, so this is the 4 hour, and the second thing that makes me think we're going to bounce, again, we came into a demand zone. We started to see a little bit of a bounce, but one thing I do want to point out on the 4 hour is that anytime we are below the cloud, all right, 4 hour is one of my favorites because it's the start of a bigger trend when we reclaim the cloud. And you guys can see we reclaim and then we come back and we touch those, and that's where we buy the dip basically until it doesn't work. And it doesn't work when usually we start to break underneath, like right here. And then when it does break, we're looking for new demand zones or trendy edges. And you can see, boom, it comes into the trendy edge. It works to the upside. It hits the upper trendy edge. It breaks down. We're cautious. Well, guess what? Going into this week, my least favorite thing is when we are underneath the cloud. So, bulls, what we're looking for is a move, or what I like to see is a move to the upside and up and over that cloud. Okay. So what does that level put us at? You can see here it's about 60-60. All right. So 60-60, and you can see I already have and let me see. I apologize. We're going to go right here. It's a little bit higher than that, 60-71. Okay. Sorry about that. 60-71 on the Z24 chart. Okay. If we break down, my next level where I believe that we could see buyers comes in down here, 623 by 5993. All right. Now, before we move on, let's go ahead and go to ESH25. All right. And I put both of these charts in for all of you. If you want to just trade off of this, the new contract, then here are my levels going forward. Same thing. You guys can see the 9 EMA is pretty close. Now remember, the levels are completely different, or sorry, the numbers. The numbers. So this is 61.21. So when we roll over, it looks like we got this big gap up, but really what you're looking at is just the rollover itself. Um, So please just know that. All right. So again, rollover, use the new numbers. These are my extensions to the upside that we could see. This is going to be my support. The other thing, if you're brand new, these charts, the reason why we have different time frames is because I've recognized over the many years of teaching is not everybody's the same. Not everybody's looking for a 5 minute winner. Some traders are looking for 1 to 3 days. Some traders are looking for 1 to 3 weeks. Some traders are looking for 1 to 3 months. Some people are looking for 1 to 3 years. So it just kind of depends on them. And so I give you the opportunity to rest your mind at ease, if you will, based on the time frame that I'm presenting. So again, everything looks really good here on this chart. Of course, I wouldn't feel right if I didn't tell you that there's a lot of divergence here and price could move back, but also price is king. And if we get up and over the top of these candles, look for price to move up into my fib extensions before the end of the year. Okay. H25, looking at the daily, these are your trigger longs and your resistance. Once again, we came down into the trigger long based off of the indicators. I'm using also some structure and Fibonacci. My next level on the H25 is 60.82, and then down here towards 60.23. On the 4 hour, this is what I have. Yes, we came into the trendy edge. I'm expecting a bounce, but just like on the Z24, we are underneath the cloud. I need price to get above there. As far as that is, and again, look at the big difference here, right? 60.70 was on the Z24, and over here, I need price to get above, sorry, 61.40. So huge difference. All right, huge difference in prices. So don't get confused. This is what we're looking at on two different contracts, okay? All right, so the next thing that I want to look at is going to be the Nasdaq, and this is the Z24, so we'll start here first. And notice on this, things are looking great. We had the double inside and up. I told you to look for continuation. That's exactly what we got. We got the buy signal. We got the continuation up on last week's chart. So again, things look a little bit different. 1, 2, 3, 4 weeks up. We do have divergence down here towards the inside and up formation. If for some reason price were to come back to this 9 EMA, I would buy. Last week's bullish channel worked perfectly. So you guys know what that means. Once it came down in here, you look to buy. Prices did move to the upside. Let's use this line right here as long as 21,574 holds. Look for price to continue into the 22,000 range. Okay. Over here, same thing. We have triggers, and this is the daily on the Z24. We are using the resistance level of the trendy edge. That's going to continue to be resistance. And then to the downside on the daily, we have a 9 EMA around 21,541 in your next buy trigger. And you can definitely try to take a dip buy off of the 9, especially because it's confluent with the trendy edge. It's just that it might pierce it and come in a little bit more. But I basically like this general area right in here to get long. Okay, if we were to come back there. If price pushes up and over the resistance level, then we're looking at it to get into the 22,079 level. This is just from a daily standpoint. Trigger short just means that we are looking at the smaller time frame for signals to get short. It doesn't mean that it hits a level and I'm just like, oh man, I'm going short. Okay. So please know that. And it's the same thing to the long side. We look for signs on the smaller time frame. Now, in saying that, I'm a little bit more advanced and I will get in the general area and I just look to go long. It's a little bit easier, if you're used to the levels, you've been doing it a long time. But if you're not, then I would say, approach it with a conservative approach. Go a little bit smaller, look for your signs to get long, but these are the levels that I expect buyers to show up. Okay. All right, so moving on, this is going to be the 4 hour. You can see we have a demand zone here and a demand zone here. This one worked from last week. I didn't move this, so we came into here and then we found buyers. It worked really well. And as far as I'm going to leave this zone here because you can see that next week's or this week's trendy edge is right in that demand zone. And if it came down to there, I'd be looking to buy. Now you could put a box just a little bit above that topping wick and that trendy edge, and these are going to be your immediate resistance into tonight. So again, if we can't gap up and over this level of resistance, then I think we go sideways to down, especially if we're underneath the trendy edge right here. Okay. All right, so now let's go into the NQH25 and do the same thing. And again, guys, these charts are right here in your room. So if you need to jot them on your charts, please do so. This is your weekly. This is what it looks like. These are the levels there. Same thing. We have an inside and up, our demand zone. We have a 9 EMA, very confluent, and we have targets to the upside. Okay, overall trend is obviously very bullish. Let's go ahead and move on to the daily. Again, numbers are a little bit different. Your resistance, we're using the trendy edge. And if for some reason we were to break down, again, I think the 9 EMA is a good place. I don't want to try to be exact, so I just take this lower green level and that 9 EMA and create a zone around it. And again, that's where I would expect buyers to come in. So basically in this area right in here. Okay. If that breaks down and I'm wrong, then your next buy trigger for me is 21,354. And again, guys, you can just go like this and create a zone. That's all I'm doing here in this area is finding that zone to get long. Okay. To the upside, no short trigger at the moment on this H25. I just, I'm really bullish on the Nasdaq, and especially I like to see the SMH semiconductors come into, some sort of buy activity going into the end of the year. So I really think there's a lot to be looking forward to towards the end of the year. At least I'm keeping my fingers crossed that we can see some sort of rally. Okay. All right, so that is the daily, and then over here on the 4 hour, same thing. This is what it looks like. You have your resistance, you have a green zone. If we do not gap up and over this, then I believe that price can go sideways to down. Let's say that for me, my portfolio is net long and I want to hedge. I can go with that idea as soon as we open that I'll go short and my stops will be placed above the previous high. Now, I won't do this with a straight mini contract. I would actually go with micros because I'm a bull by nature and I just feel a lot more comfortable going short on the micros with, several contracts and not be at full position. And that way, if I'm wrong, I don't feel so bad about it because buying the dip is really right paid off for the majority of traders across this entire year. But if for some reason you were extremely bearish this entire time, then you've had a really difficult time this year. And I hope that wasn't you. All right, so we've gone over ES and Nasdaq. That's a little bit longer than normal, but again, with the contract rollover, I want to make sure that I was starting to chart on the H's. So again, I hope you appreciate that. The next thing that I want to focus on is going to be um, Bitcoin. So let's come over here to Bitcoin. You guys know I'm a huge fan. Love to see it. I sent out, my Christmas wish, and that was to get over 105,000. It'd be nice if we could do it this week. It's right here. So we hit my target that I gave you guys a while back, and that was great. But we pulled back into demand or that trendy edge. Look how awesome the trendy edges are, right? So the trendy edge was tested, then we got the pop. Going into this week, what's nice is see this trendy edge here, the future trendy edge, and where price closed. You're very close to it, but it's still the same thing. If we're under this level, just think to yourself sideways to down until we get to a level of demand. And right now, the easier approach for me, and this is what I told you guys last week, as long as we hold 90, I believe we're headed up to 105 again, and then to possibly close out at 114,000 this year, okay, or around, or even surpass it. I don't care, but as soon as we get up and over this, I want to see a base, and a base looks like this. We'll break it, then they'll flush it because everybody's like trying to buy the breakout, and then they'll take a lot of people out, and then they'll do something like this, okay. So this is the bigger, well, not the bigger picture, but the bigger picture is as long as we stay above 90, 105, and then somewhere towards 114. All right. Other than that, once I finish here, we'll go over, I'll make the video for the SPX room. The SPX room will go over the trades from last week, give you guys some more details. But before I finish, very, very important, before I finish, please everybody know that we are going to have a open house, if you will, here at Simpler Trading. So if you're not a member here, most of you have probably received emails and so forth, but we do have an open house coming up, and I think it's important to let your friends know as well. We have a lot of amazing traders, some amazing trades that have come through the pipe here recently. I think Taylor had like a $100,000 week or a $100,000 December so far. Just absolutely impressive. Henry had a $1.7 million trade on Tesla. I mean, right off, that is absolutely insane, and I could only like have I wish that I could say that I could do something like that, but I'm not there yet. I think he had mentioned it's taken him 14 years to get to a trade like that, and very impressive. You guys all know John Carter, very impressive trades as well. We got Cody kicking it with the future trades and showing you guys how to use some of those prop firms and stuff like that to your advantage. Just a lot of amazing traders here, and you have Sam who came out with and Taylor with some upgrades in their indicators. Just a really good time to come and check out what Simpler is doing. And I would really like to see you guys take advantage of it. I think it's like 3 days. You can come in, it's free. Tell your friends about it. Get a fill in. So you're going to get access to the central room to see all the different things that we offer here at Simpler. Other than that, once again, I really appreciate you. I appreciate your support. Let's have an amazing week together, and I can't wait to trade with you. Have an amazing day. Bye.